Hello, good afternoon. Welcome everyone to our first webinar of the year. We're super excited that you're here and that you've taken the time out of your busy schedules to come get a little bit of more education, expand your base of knowledge and learn a little bit with us on this wonderful, fabulous Thursday. We have the one and the only Lynn Perkins with us today. Aren't you so blessed? I know that I am. I'm super geeked about this information that we're about to get today. Lynn is a veteran with over 15 years of experience. She's like a serial entrepreneur. She's been starting amazing businesses probably since I was coming out of the womb. And listen, she is about to dump on us the type of information that you wish you would have invested a couple $1,000s into. So I hope you're excited. I hope that you're ready. I hope you have a pen and a paper. She's here to talk to us about strategizing, about how to merge certain business relationships. She is the president and one of the founders of UrbanSitters, and she is passionate about connecting parents with sitters and using technology as a platform to do that. So we're going to turn today's webinar over to her. As always, feel free to drop any questions that you may have, comments that you may have in the chat box or in the Q&A box, and we will definitely get to those, whether in the webinar or afterwards. We're going to make sure that we get your questions answered so that you can leave today's session informed and inspired. So we're going to go ahead and turn it over to you, Lynn.
Thank you. And I just want to say thanks to Apna and to you and Kelly for having me. I hope I can make the topic as exciting as you introduced it as. I know when people think about partnerships that involve legal and financial and all of that, it sounds a little daunting. And I'm hoping that my presentation today will break it down and encourage people to go out and form the right partnerships for their business. So I'm going to go ahead and share my screen. I put together a deck for today, and I do hope that people will ask questions. And no question is too basic or well, it might be too complicated, but I'll aim to answer them all. So today we're going to talk about how specifically strong, let's get some good partnerships built, how strong partnerships can help you expand your business, enhance it, and good partnerships always make working together a little bit more fun. So hopefully we can leave you with some tips today that will get you excited about building partnerships into the future. And I thought I would start by even just talking about, what kind of partnerships are out there. And there are lots of types of partnerships, four main ones. So the most basic type of partnership is a vendor partnership, where you decide for your business, you're going to focus on using XYZ software. Maybe it's QuickBooks, maybe it's Zendesk for your customer support, or you're picking a new phone or internet service provider. And in those partnerships, there's not really a lot of interaction between you and the partner. You're just making a decision on what's best for your company, and signing up for what's usually a pretty basic plan. Then all of our businesses have a direct sales partnership component. So every day you're building partnerships with the families that you serve. Probably also you work with some companies, whether it's for backup care or you're helping with hotel concierge care, things like that. Those are more like direct sales partnerships. And then there are service partnerships, and all of our businesses have these in the expense category. So if you think about it, we're all spending money on lawyers, accountants, consultants, insurance brokers. It could be that you have something really unique to your business and you have to hire in an expert as a consultant to work with you. Those are all service partnerships, and they definitely have a more one-on-one component to them, where you're working with these people oftentimes side by side. And then finally, there are strategic partnerships, and these can often be bigger partnerships where you and another company have decided to work together. Maybe it's to bundle your services, to have a broader offering, or perhaps you meet somebody who says, hey, I want to be a reseller of your services. I work with a lot of hotels that need childcare, and I'd like to be the person who sells your services. In those cases, you're probably doing some kind of a referral share. And then there's a revenue share where you get together with another company, and perhaps you're selling their services and they're selling yours, or they're doing lead generation and you're giving them a bit of a referral for sending clients your way. So anyhow, we're going to really focus on two main categories today, and those are service partnerships and strategic partnerships. They tend to be a little more complicated than the ones listed above, and they really have some nuances, and I'm hopefully going to give you some tips for ensuring that you're building the best partnerships. The first thing I would say if you're setting out to tackle partnerships is before you go out and start meeting people, actually take the time to think through what is it you're trying to do. And maybe we can use the example of you're looking to partner with a company in your city to offer backup care services. So the first thing you want to do is really map out, okay, what type of company am I looking for? What are my clear objectives? In this case, my objectives would be to find a couple of companies that are going to bring me steady clients for backup care, and my budget and timeline. If I put this in my 2023 plan, I probably need to be out there trying to meet these potential customer partners sooner rather than later. You'd want to put some criteria in place. If we want to flip these requirements and expectations for a second and think about an attorney, let's say you've just started or you're about to start your agency, and you know you need to incorporate the business and you need to get some advice on contracts. I'd want to sit down and I'd want to actually write down, okay, what are all of the criteria that I'm looking for? I need somebody who can do business formation, but I also need someone who can do contracts. And I'd ideally like to find someone, maybe they don't do it, but maybe someone at their firm does litigation in case I find myself in trouble. So make sure that you're really clear about what you're looking for and creating that criteria. That way, when you do start to meet people, it makes it a lot easier to make a very objective decision about the best partner for your business. If you're going into a category that's totally new for you, maybe you've never worked with an accountant before, or maybe you've never gone after trying to get business, backup care business from corporations, you're going to want to start with some feedback from peers. So one of the things I would recommend is, if you're looking for especially a service partner, start to get referrals from peers. I think one of the best ways that you can get referred into a potential partner is through a business that's similar to yours, somebody that you trust. That way, you know that this potential partner you're interviewing has worked with a business in your space before. I look for association recommendations. So I know, APNA has a lot of partners that I'm sure people would recommend that different entities have worked with. If you're part of a local business group, I'm sure that people in your group would have recommendations. And then start to do some online research. So that's where I would then say, okay, check out all of those referrals that people have given you online. In searching for them, you may come across other companies that seem like a really good fit, but make sure you're creating this list before you just start pounding the pavement. Because what you don't want to do is just fall in love with the first potential partner you meet and sign up for them and find out later they're not the right partner. So then now you've gotten to the point where you're out there, you're meeting potential partners, and you need to start making some decisions. And so you want to make sure you do your due diligence and get some background on these potential partners before signing anything. So first of all, the most basic, you've made this criteria list. Does the potential partner meet your criteria list? And or 90% of it, or whatever is an acceptable amount to you. I'd also be really careful on making sure that they've worked with companies of both your size and your specialty. Somebody might tell you that XYZ law firm is the best in town, and they might be the best for 90% of businesses, but if they've never worked with an agency before, or they've never worked in a situation where you are employing care providers or contractors, they might be the best in what they do, but they might not be the best for you. So I'd really make sure that they're comfortable working with your size company, and also that what you do. And the size part is important because what you don't want to do is find yourself in a situation where you've gone with the hotshot law firm in your city, and then it turns out they don't really have a lot of bandwidth for a smaller partner. Are they stable? Are they in good standing? I'd also make sure you can do some online research and find out if they've had any lawsuits against them. So if you're about to use an insurance broker, do some Google research and figure out, are people happy with this person? You don't want to find out down the road that in fact they've been sort of the Better Business Bureau has lots of reports of them not following through on doing what they say they would do. Take the time to actually do some online research. Have they provided references? And if so, maybe just a few of them, but I would call a few references and find out what context they've worked with this service partner and what their experience has been. And then, this seems like a basic one, but make sure that they have the resources to meet your timeline. If you are finding an accountant in September and you need to do a late filing of your taxes by October, make sure that they have the bandwidth to take you. You'd hate to fall in love with a potential partner and then find out that they don't actually have the bandwidth to serve you. And then, are their fees appropriate? One of the good things about meeting with multiple vendors or multiple partners is that you'll find out there's a wide range of fees, and are they square in that range? Is the team talented and experienced? And then finally, this one might sound so basic, but what does your gut say? So if this is somebody you're going to be spending a lot of time with, they're going to know the ins and outs of your finances if they're your accountant, or you're going to come to them in a crisis if they're your lawyer. You really want to make sure there's a good fit there. And sometimes that fit just has to come from your gut. Are they somebody you'd want to work with, and do you trust them? And I would definitely emphasize, don't belittle that feeling. You really do get a good indication sometimes on how you would feel about working with somebody. And then this is just a little snippet, but these are just kind of like my tips for how do you find top caliber partners, and maybe for a little bit less money. So one of the things that I recommend is you can oftentimes find people who have just left the prestigious law firm or PR firm, and they're out on their own. So I'll give you an example. When we started looking for a PR firm for UrbanSitter, we were referred to a lot of big PR agencies that do consumer facing work. And yes, they were great, but we were just a little guy at the time, and we were clearly going to get lost in the mix. And then I got a lead from somebody on a woman who had been with a big PR firm on the East Coast, and she had decided to go out on her own. And so we were one of her first clients. And we were very fortunate to work with her when we did, because she was able to put us at the center of her attention. She didn't have a huge book of business yet, but we got the caliber of somebody who was working at a top-notch firm because she had just left working there. And similar with our law firm, we went with a couple of partners that had left a pretty prestigious firm to start their own, and we started working with them at a time when they were just building their client base. And also, you don't have to work with the most senior person. I would say that 90% of your legal or accounting needs are going to be pretty straightforward. And it's okay to work with the more junior partner and then just leverage the more senior person there when you can. And then the other little tip I have, if you want to save money, is if you have flexibility on time, you can also save money. So we work with a great accounting firm, and we get them for a little under their average rate, because we tell them before the beginning of every year, hey, we need an audit done, but we're willing to be flexible around some of your other client schedules. And because we're able to afford them some flexibility, they love it, because we bring them business volume when they're having a slower time, and it works for us because we're getting a great firm at a slightly lower price. So negotiating a strong agreement. So really, I was thinking this through, and I was thinking, okay, so when you go to negotiate, like, what are the factors that you can actually influence or control? And really, in my opinion, it comes down to, there are three main factors, and then we'll talk about some sub components. But the main three levers you have when you're negotiating a strong agreement would be price. What are you willing to pay, or what are you willing to charge the partner? Term length, am I doing a 1-year deal or a 4-year deal? And then the breadth of the service. Am I going to allow this partner to offer my service to all of their employees, or just a subset? So really, the main things that you can control are the price or negotiate on, are the price, the term length, and what is the deal that's being offered, what services are being offered. And so I think this is really key to think through when you're thinking about your own services. If you're going to be somebody's partner and they're coming to you and saying, okay, what are you going to charge me for 200 backup care days, or whatever it might be, your levers are really around how many people is it. You might say, hey, for 200 backup care days, it's X, but it's only going to be 80% of X if you can give me 400 backup care days. So your real levers are around price, term length, and how broad the service is that you're offering. And then there's some interesting sub levers. So one of the things that we think about when we're doing deals is, especially in a situation where let's say it's a big partner. We're going to talk about going after the big mammoth partner later. But when you're going after the big company, it might be really beneficial if you're able to use their name in PR. So you might say, hey, I'm willing to drop my price by 20 cents per employee per month if you're willing to let me use your name in publicity. So maybe this is the way you're going to get your name out there, that you're doing big partnership deals in your city. You can also, if you really want to get a deal done and you're a little bit nervous about it, and you think, oh gosh, like I'm not totally convinced this is the right deal, but it's better for us than not doing the deal, put a cancellation clause in there. Give yourself an out and say, hey, we want to, after 6 months, be able to review this and have 30 days to get out of our deal. Or, hey, we're willing to do a 2-year deal, but we want to, after the first year, have 20 days to tell you that we're not going to continue. Give yourself some kind of a clause that lets you sort of have a change of heart. And then the other thing I would say is around the deal timing. So oftentimes you can use timing in your advantage. So let's say that I'm talking to a company and I really want to partner with them to offer backup care to their employees. I might say, hey, this is our rate and this is our deal length, and we don't really negotiate on that, but it's October right now and you wanted to start this on January 1st. How about if we do this deal as is, but I'll give you the services for free in November and December, so you can already start promoting them to your employees before the end of the year. So there are a few levers you have when negotiating, and really I think it kind of comes down to these main points. And I would say another thing, you can get really bogged down in contracts when you're doing partnership deals. And I actually learned this from one of the UrbanSitter investors, which is, focus on the business terms first, because you have to get to agreement on those, and focus on the legal ones second. So when we were closing our Series B of investment, we had taken in some initial funding to grow the business, and we were now going back for a bigger round. And the main things we were talking about is like, what was our company worth? How much money was this investor going to put in? And then there were all sorts of legal terms. And the woman that I worked with who was investing in us said, you know what? Before we get our legal teams involved, why don't the two of us sit down and go through the top 6 business terms that are listed here? Because I think we need to be able, we're the two people who are going to be working together. We need to be able to agree on the business terms, and then we'll let our lawyers deal with all of the other clauses that are sort of secondary. And I think this is a really good advice, especially as you're looking to save money on legal fees, and also kind of figuring out like, hey, is this deal going to get done? Because it's so easy to get caught in the minutia when you're doing a contract, that I think pulling out the business terms, and sometimes those come up in sort of like a letter of intent, or if you think about it, this might be the terms that you get in like a summary email from somebody when they tell you they want to work with you. Focus on those terms first, because if you can't get to agreement on those, it's kind of irrelevant to work on all the legal terms that go with it as well. And then there are some deal breakers, in my opinion. So never go beyond your limit or deal range. So, I mentioned earlier this idea about PR, like, hey, there's this big company out there, and if we got them, it would change our business. Well, that's great, but make sure that you're not overextending yourself. The deal is never worth getting done if it means you're going to put your company in jeopardy if something were to go wrong with that partnership. Don't either agree to unrealistic performance guarantees. So if they say, let's use the corporate care piece again for a second. If someone says, well, I want to know that you're going to fill 99% of the jobs that come your way. Obviously, we all know that that's probably not the case, and that oftentimes it's even just due to factors that are out of your control. So don't agree to something that you can't fill, and also be a little suspicious if the partner, if the lawyer tells you, hey, my team will get back to you every time you call us within 20 minutes. Like, chances are they probably can't. So just make sure that those guarantees that people are offering seem realistic. And then the other thing I would say is be very cautious. This is going to come up again in my presentation, but be very cautious of burdensome payment terms. I would say that if you're the person who's procuring the service, make sure that you have, a month to pay on any invoice you receive. But on the flip side, if you're the one who's receiving the money, make sure that the partner, especially if they're a bigger company, is agreeing to payment terms that you can live with. So if, for instance, if they're going to be 30% of your business, make sure they're paying you within 30 days so that you're not floating the capital for them, and make sure that you have clauses to make sure you can get paid. So those are kind of my main points on negotiating agreements. And then again, because most of us either started the businesses ourselves or started as small businesses, I love to think about how you can make your money go further. And I think whether you're now a big company or you're still a small company, these are always good tips. So number one, make sure you pick the appropriate provider for your business. So don't, again, you don't need the major league pitching coach if you're just out there playing softball on the weekends with your friends. Like, make sure you're getting the company that's the right size for what you're doing. On the legal front, and actually also on the accounting front, I highly recommend doing some of the prep work yourself up front. So for instance, if I know that I'm going to take a contract to my attorney, there's always some basic things that are going to go in there. He's going to want the name of the company we're partnering with, their address. He's going to want to know all of the different terms that go into the deal, who's going to sign the agreement. The more I can do in terms of providing my attorney with the prep work, the less I'm going to be billed. And the same thing goes true for an accountant. So you know that every month your accountant's going to ask for a detailed list of all of your expenses and all of your purchases, whatever it is that your third party partner needs or wants. Like, make sure you're doing as much of the prep work as you can. I would also say, like, be very, very specific about the scope of work that you want them to do. So an example of this might be, you're going to work with a lawyer on something. You want to better understand, maybe you're going to do a deal and buy another company, or you want to understand, like, hey, my business is currently in Tennessee and we're going to expand into Kentucky, and we want to understand what it's going to be like to do business there. Make the scope as specific as possible. Otherwise, the partner may go out and do more research than you really want them to, and you'll end up paying for that. I think my colleagues would joke with you that I don't have a lot of skills in life, but one is that I'm very good at watching the clock when I talk to attorneys. So most attorneys and accountants will track the time by 15-minute increments. And so, if I know I'm coming up on that 15 minutes and we're almost wrapping up the topic, I will really quickly get off the phone to save myself $150 or whatever a quarter of the hourly rate is. But it sounds kind of ridiculous, but again, the more prepared you go into these conversations, if you have your questions written down in advance, the more you can stay on topic, the less you're going to pay. I mentioned this earlier, but offering flexibility in exchange for a better rate. I mentioned that we did that with our accounting firm. And then ask for service level agreements. So if you're on the receiving end of the service and you want to know that your attorney is going to get back to you in 2 hours, or that you're never going to be billed for a senior person reviewing a junior person's work, whatever it is, make sure that you have service level agreements so that these partners that you've engaged with are giving you their best work. You can barter for a reduced rate. I double check this. Oh, I should also preface this. I'm not an accountant and not an attorney. So take this just as, do some research to make sure that what I'm telling you is true from a legal perspective, but this is true. I did look this up. It is legal in the United States to barter. And so an example of this might be, we don't have this arrangement, so I'm going to make this up, but an example of this would be that our law firm signs on to use UrbanSitter for its corporate backup care program. And we might say, okay, great, we're willing to pay the higher 2023 rate than we wanted to, because you're going to use us or we'll reduce your fees off of, reduce some of our legal fees off the bill in exchange for our backup care program. If you have something to barter, you might want to try throwing it out there. I don't think that we've ever done it, but I thought this was an interesting tactic. And then offering a longer term. So this can really work in your favor with actually the first category of partners I mentioned, things like software companies and internet services, things like that. Oftentimes, if you're willing to do a 2-year deal with them, they may give you a price reduction. Or if you know that you're getting a great price, you might say, hey, I want to lock this in for 2 years. And then my final tip is, anytime you're working with a third-party partner, especially if it's a consultant or an attorney or anybody, review the invoices in great detail. The people you work with aren't perfect, and they may misrecord something. And given the hourly rates that are charged for services today, it may save you hundreds of dollars. So just make sure you're reviewing the invoices and understanding what's coming in. Okay. So I know a lot of people here, because this came up at the last APNA conference, a lot of people here are eager to work with the big partner. And again, this could be that you want to work with the biggest company in town to do backup care, or you have the idea of doing nationwide childcare for a hotel company or whatever it might be. And you are about to go after the the company that is much bigger than your entity is. Here are some tips. Again, these are, some of them are tried and true. Some of them are ones that we've used once or twice, but the first most important thing is identify your in, like who is it is always better to go in with a warm lead than it is to go in with no lead. And if you're selling something to an HR team, your lead doesn't have to come from an HR person. It can come, if you have somebody who has used your service for years and they are passionate about your business and they are comfortable to go to their boss or their head of HR or whoever it is and tell them how wonderful your service is and how much it would help to retain their employees, by all means, have that person do it. Because getting a lead from somebody who can speak highly of your company or about you as an individual is always one of the best ways in. They can also, usually when they reach out within their company, they can usually find out who you should be talking to. So if you're going after a massive partner and you're eventually wanting to sell to the HR department, maybe that company has a parent group that meets every month, or maybe they have a new moms or new dads club, and going to that organization, if you haven't in there, is going to be a step in the right direction. So you may have to come in. What's even better is if you actually have multiple leads, because usually they can more quickly send you to the right person. But you definitely know you're in and have your advocates. Be very specific about what you want them to do. So, hey, I would love it if you could introduce me to the person who makes benefits decisions at your company, because we already, I don't know if you know this, but we already work with 5 or 6 parents from your organization. I happen to know that anecdotally, and I think would be a great service for your company. Be very specific about why you want the introduction and what you're hoping to get out of it. When you do get that meeting, know the organization's pain points and needs. So if you know people that work there, find out from them, yeah, our company is really having a hard time bringing people back after paternity leave because we don't offer great work-life balance. So then you can go in and sell the HR person on, hey, I don't know if this is the case for you, but I know that retention after leave is top of mind. Like if you can go in strong with the point that's resonating with them, you're going to get their attention a lot faster. And then once you're in, when you're having that initial meeting, whether it's with the person that you know who brought you into the company or they've introduced you to someone else, you want to really quickly figure out who you're ultimately selling to. So that first meeting might not be with the final decision maker or the person who has the budget. So very quickly figure out like who is it that you need to have that next meeting with so that you know who you should be selling to. And then you do have limited time. You're going to have their attention span for, let's say, 20 to 40 minutes. Make sure that when you're selling to them that you're really focused on your solution. What is it that you would bring to them? What are your differentiators? So why should I pick working with your company over your 6 competitors? What makes you unique and what makes you a better fit for my as a partner? And then don't forget to include your return on investment. So companies, any kind of company, they don't usually just have budgets growing on trees, especially right now in a recessionary time. Like, tell me why what you want me to buy from you is actually going to pay off, tenfold for my company. And so it could be going in and saying like, hey, we surveyed all of the families that we work with, and they told us that when they use our service, it allows them to miss 20% fewer days of work. Whatever it is, like go in and be strong about why that return on investment is good for the company. So the pitch is kind of, I'm imagining that's the meeting that you're sitting in, whether it's on Zoom or you're in person. And then you're going to have your materials. You're probably going to have a slide deck or a follow-up email, whatever it is. When you either leave that piece of material or you email that piece of material, make sure to include the overview and the selling points and the ROI that you shared in the pitch, because oftentimes what happens is I may go in and I'm talking to Erica, like, hey, Erica, these are all the reasons why you should work with me. And then Erica's actually going to turn around and share that information with the purchasing person at her company. That person didn't get to sit down on my presentation. And so we want to make sure that they also get all of the information. I don't want to have to count on Erica to repeat word for word why our service is necessary. I want to be able to make sure that I'm leaving materials that she can, share with whoever's buying the service, and they have all the information. Another thing that's kind of key is if you're selling into a really big company, it's really helpful to know their buying cycle. So they might say, hey, you know what, thanks for coming in March, but our budget for 2023 is already set. And then I might say, oh, okay, I understand. When would you start to think about buying decisions for 24? Like, would it make sense for me to come in June? And they might say, oh, you know what? We start to regroup around July and we usually firm up our budget by October. So there, right then and there, I'm putting in my calendar, okay, reach back out in July, because I want to make sure that I'm hitting them when they're actually starting to put budgets together for next year. The same can be true if you go to, let's say you go to the local boutique hotel in your city and you say, hey, I don't know if you ever need childcare for your guests, but we have this great service. They might tell you, oh, you know, this sounds amazing, but we already have a partnership with ABC agency. And then you might, instead of kind of just shrugging and walking away, you might want to say, oh, that's interesting. You know, how long is that partnership for? And they might say, oh, well, we just signed for another year. I think it expires in December. So you might want to reach back out to them in September or, you know, even late August when you know they haven't had to give notice yet. So knowing when your partner is going to actually make a purchasing decision can really be a powerful tool to use. This one's super obvious, but never agree to something you can't deliver. So for instance, in the case of UrbanSitter, we do work with corporations to do care. And I remember one time we had somebody say to us, oh, well, in addition to pet care and child care and elder care, you know, we're looking for, do you have people who specialize in, we have a bunch of employees with exotic birds. Do you have people who can do bird care? And I just remember shooting a look at my salesperson, like, no, we do not do bird care. This is not our thing. So don't agree to something you can't deliver, because you don't want to find you want to please this partner and have them for years. You don't want to agree to something you can't do and miss that mark. And then another one to note, and this I unfortunately I've seen startup companies go out of business over this, is the deal isn't done until the first check is in the bank. So even if you have a signed agreement, or you think you're close to getting the yes, until that first check is in the bank from the partner, don't count your chickens before they hatch, because things do go wrong, and you would hate to put so much of your company's resources into something that doesn't work out. And then finally, you know, just you've got the deal's in hand, you've celebrated with some champagne with your partners, and now what do you need to do? You need to make the launch a wild success. When you have a big partner, you are fighting even more as the small guy to make sure that you are meeting and exceeding their needs. So invest in making sure you have all the training materials that you need to work with them. Go out of your way to make it a wild success so that they are both excited to share the partnership with everybody around them, and also to make sure that you're lining yourself up to keep that business. And then, okay, so let's say you go into the big partner and they are excited about you, but they are a little bit nervous about working with you, maybe because you're smaller or maybe the timing isn't right. So my one other creative tip would be offer up a pilot program. So let's say you're talking to a potential partner that's going to resell your services. So someone says, hey, you know, we have a bundle of services we offer, and we'd love to offer agency care in there, but we're not so sure it's going to be, you know, taken up by people, or we work with lots of different industries. You might say, you know what, I can understand why you're a little hesitant. I think we are the right partner. Why don't we start with a pilot program so that you don't have so much lift on your end? Why don't we start by having you sell us to all of the law firms that you work with? It sounds like they're the ones who have been requesting the service the most. Let's do, you know, let's work with a subset of your clients. We'll see how it goes, and we'll make the lift really easy for you. And if they say yes, just make sure that on your end, you want to collect as much data on how successful that program is with that subset of people, so that you can go back and sell the full business later on. And again, offer top-notch customer support. You want to blow them away on this pilot program so that they can't wait to roll you out for everybody. And then, okay, so you've got the partnership, you've had the champagne. Now it's really in your hands to make sure the partnership works. And I'm now kind of presenting as if you're the partner that's delivering the services. We're now switching from your lawyer to you are the person delivering the services. Although I would hope that when you're working with partners, they do the same thing for you. Over communicate. You want to have frequent communication, especially with very big companies. You should offer education if you're offering a service that they are going to to share with all their employees. You want to offer webinars to explain to their employees how to use your service. You want to be an expert in your category. You can offer to do webinars on topics that you know a lot about. Let's say that you are now going to be bundled into somebody's suite of services and their sales team is going to go pound down doors for you to sell your service. Well, you want to make sure that you're doing webinars and trainings for those salespeople so that they are putting your business in the best light when they're out there. Don't assume that, especially when you're working with big companies or hotel chains or whoever it might be, don't assume that they're going to put together materials to market your service. You should provide those to them. You want to do everything you can to make the partnership as easy as possible for the partner so that they're eager to promote you. Monitor and measure, make sure that you're keeping track of how your partnership is going. You want to be able to share stats back to the partner. Hey, we noticed last month that there was a real bump in usage. Was there something different? And they might say, oh yeah, we had company lunches every day for a week and we talked about all of our benefits or whatever it might be. Just keep track of how the data is looking so that you can try to improve your service offering. Offer to meet quarterly with the contact that you have, your account manager on the other side or your partner. It's just always good to touch base. Make sure you stay top of mind for them. Find out what else your company can be doing to better offer your service. And then get feedback from all of the customers you're working with. Get either a net promoter score where you're asking very specific questions, like, would you recommend this to a friend? Those kind of things. Getting quotes from customers is always good. Because what often happens at these big companies is that the person who is making the purchasing decision about renewing the offering is sometimes a little bit removed from it. So you want to make sure, like, you can't assume that the head of benefits is hearing from all their employees how great your company is. You need to actually be putting quotes in front of them so that if they've got like 10,000 partners they're managing, you want to make sure you're giving them the feedback that they may not be getting from their company. And then another thing, this actually had come up as people had submitted some questions before this webinar, which I really appreciated. And one of the questions was around types of deals. So revenue splits versus referrals versus resellers. And these are all a little bit different. And so I just want to make sure when you do a deal that you pick the type that's best for your partnership. And I'll give you a couple of examples here. So we actually, UrbanSitter has a revenue split deal with a partner called Kinside. So we focus on in-home care. We don't focus on center-based or preschool type care, but we found a company that does. And oftentimes we'll go to big companies. Let's say we're pitching to like an Apple or a Google, and they want to offer both to their employees. And so we decided that, hey, we don't ever want to be experts in the other person's space, but together we actually could be more powerful. We could go up against the bigger companies if we do this together. And so we actually have a partnership where we have a price per employee that we offer our benefit at. And then, on the back end, we know what percent of that we get and what percent Kinside gets. And it's a pretty new partnership for us. And they've been great to work with. And we found there's just a lot of synergies there. And I'll talk about this later. It's one of those partnerships where it started off making a lot of sense when we first started talking about it, and the feeling was very mutual, and it's continued to be a great partnership. I think when you go into revenue split partnerships in particular, you may feel that it either doesn't feel like a good fit or there's something that's kind of nagging you about it. Partnerships don't get easier. If they don't start off easy, they're not going to get easier. So you kind of want to make sure from the get-go they're a good deal. But that's a kind of a revenue split partnership. And then we have referral partnerships. This would be more like somebody referring a customer to your business. And you may even already have this in place with some of your families that you work with, where you say, hey, by the way, I don't know if you know this, but when you refer new customers to us, we give you an hour of free care. Or, hey, we've just launched a subscription component to our agency business, and you get a subscription for free for a year if you bring us a new client. So referral partnerships on that scale, that's kind of how they work. On a very big scale, they work in the sense of you may partner with, let's see, like the convention center in your city, and they may provide a link to all visiting conventions that say, need childcare while you're visiting Washington, D.C. Great, here's an agency that we work with. And you may be paying the convention center a small amount every time you get a customer from them. And then there's reseller. This one I have mixed feelings about, because you're essentially allowing somebody else to just sell your brand. So this would be, for instance, if we had, if UrbanSitter's corporate benefit offering was $2 per employee per month. And some big company came to us and said, hey, we sell into every HR team out there, let us sell you. And they know that we're $2, maybe they're going to sell it for $2.20 and they're going to take a cut off of it. So a reseller is essentially taking what you're offering and they're either marking it up or trying to work with you for a discount so that they can take a cut of it. And then my other thing about managing partnerships, in addition to making sure that you're communicating and you have the deal terms lined up correctly, is just be honest and tackle issues when they arise. So especially in new partnerships, you're going to hit roadblocks that you didn't anticipate. And I think if you are very proactive about communicating with your partner, you can get through them. What are signs that the partnership is not working out? These are probably as important as the signs that it is working. So the first one that I think is key is lack of engagement. You sign up a new hotel in your area and they are so excited to work with you. They have 10 zillion families coming to visit this summer. And then all of a sudden summer hits and you're not seeing anything. Well, that can mean a few things. It can mean that they're not marketing you to their families. It can mean that the person who you worked with, this is not uncommon, but your account partner on the other side has left the job and you just didn't know. But lack of engagement is not a good sign. And that's a time to pick up the phone and call the partner and say, hey, we're so excited to work with you. What can we do to boost this service? And oftentimes it could be, especially if you're partnering with a big company, just a total disconnect. Oh, I shared the marketing materials with the person who runs our intraweb. They must have forgot to post them. Make sure you're following up on lack of engagement. Missing deliverables. This would especially be one if you've engaged the partnership with someone else. So your accountant says, hey, we're going to have a first draft of the 2021 numbers for you by October 15th. And that date comes and goes. Not a good sign. They tell you, no, we're going to have them next week. When partners start to miss deliverables, that's a bad sign. You want to make sure you're on top of that. Behind in payments. This is a huge one if you're a small business. You do not want to work with a bigger partner or even any partner who's not paying you on time. And I am sure that everyone has an example of that family that they work with that, man, they seem so nice, but they just never pay on time. And you get to a point where you just don't want to work with them anymore. And then imagine that at scale when you're working with a company that owes you for 20 families usage of care and they're starting to fall behind. But being behind in payments is not a good thing. And then partner team turnover. This one is really challenging when you're working with a big company. So I'll give you an example. So UrbanSitter works with one of the, top 10 largest employers in the US. And that's great, but it's a company that's known for doing a lot of reorgs. And so we've probably had 8 account managers there. And so every time we get a new account manager, we have to go back to step one and repitch them. I mean, our deal is set, but we also want them to be excited about it. They've kind of inherited working with us. And so we were constantly reselling and re-educating that new partner. So, when you start to have team turnover, that's a bad sign. And on the flip side, if you're working with a firm, let's say you're working with a law firm and you start to have partners churning, like that's not a good sign either. You want consistency. And then one of the questions that came in, I thought this was really key, and actually it ties in nicely with partnerships, is around insurance. And the type of insurance you have is, number one, incredibly important for your business safety and success, but becomes even more, I don't know if transparent is the right word. Companies that partner with you will ask you for certain insurance coverages, and you want to make sure you have them. I mean, you should have them anyway to protect your business, but it's a good thing to know when you're partnering, especially with bigger companies. So the most common types of coverage that people will look for and that you should have for your business are commercial general liability insurance. That's kind of like the most basic. It covers bodily injury. If somebody gets hurt, whether it's on a job or at your workplace, or there's property damage. I mean, this is kind of the most basic coverage. And then there's workers' compensation, which a lot of states actually have a law requiring this, I believe. And this is around if somebody were to need to take disability, or if there was they have a medical issue that's covered, things like that. And one thing to know for agencies, and I'm sure I'm not the expert in APNA on this, somebody else is probably, is around what type of workers' comp you need for your care providers. I know some people have contractor care providers. That's different than an employee care provider who in most states would need to have workers' comp, but understanding that could be crucial. And I'm definitely not the person to answer that question. And then most businesses will either have professional liability insurance or errors and omissions. And it kind of just depends on what type of business you are, whether it's called errors and omissions or professional. But this is essentially what covers you when you've made a misrepresentation, or you've made a mistake, or you said, all of our care providers have masters in education, and somehow somebody has lied on their application and it slipped through and it didn't get caught. Like, so it's not professional and E&O insurance. It's not, it can't be negligent. You can't have known about something and then have this insurance cover you up. But this is truly for when mistakes happen, or oversights happen, or something is misrepresented in a contract. So these are kind of the most common 3 types of insurance that you need to have. And most large companies, when they partner with you, will have requirements like, we want you to have at least $1 million of total coverage. This is kind of in my bullet point down below here, is like your maximum coverage. We need you to have at least $1 million, and it needs to be at least 250,000 per occurrence. So per occurrence means each time you need to have at least $250,000, which adds up to the million, is the max, the ceiling. And then you want to also think about if you need other types of coverage. So for instance, if you're an agency where care providers driving children is part of your business, you definitely want to have automotive liability, and you want to make sure that it covers your care providers. Cybersecurity is one that's on the rise. Do people book through your website? Do you take credit card information from people and store it? Cybersecurity is one where the insurance rates have really gone up over the past 24 months as more cyber fraud and stuff is happening. But if you have any kind of a website where you collect information from people, names, social security number, kids' names, kids' ages, anything where you're collecting and sitting on data, you want at least a minimum cybersecurity coverage, in my opinion. Again, I'm not the insurance expert, but I am seeing, and I'm hearing from my insurance broker, that cybersecurity policies are both on the rise in terms of people needing them, but also that the rates are going up. So keep an eye on that. And then when you go to pick your agency that your broker usually that you're working with, make sure that they're sending out, that they're working with agencies, insurance agencies that have high ratings. So for instance, when we do a lot of our corporate benefit partnerships, they want companies that have at least an A rating, and you need to have XYZ of coverage. So make sure that your insurance broker is working with reputable agencies. And agencies are rated. I think there's like 5 or 6 different organizations that rate insurance providers, and they look at their financial stability and other factors. But you want to make sure you get ultimately that your coverage sits with a good agency. And then I know we have some questions, so I'm going to wrap up. Just avoiding pitfalls. I guess my number, if I only could talk about one thing on this slide, it would be very, very selective about who you work with. Do your due diligence to make sure that you're working with a good partner. Make sure that the policies that you have in place are visible, clearly outlined, and obeyed. So if you have policies for the types of care providers that you work with, or if you have policies around bookings, whatever it might be, make sure that those policies are outlined and followed. Have solid written contracts. I know it's tempting sometimes to do things on a handshake, or, oh, this family's friends with a family that we've worked with. No, make sure you get it in writing, and act before it becomes an escalation. So if something goes wrong with a big corporate partner or even a family, I mean, as many of you already know from the course of your work, make sure that you are reaching out at the first sign of trouble. One of the best ways to avoid litigation is to cut it off by offering proactive support. Oftentimes people fester and get really upset about something, and that's when it turns into a more serious thing. And I'm sure you've been told this before, but if given the chance to deal with an escalation, always do it by phone versus an email. Email does not convey tone very well, nor does it give the person on the other end just the chance to vent and sort of get some of that anger out. Sometimes just doing a phone call is the best way to address it. Act with integrity, empathy, and honesty, and you should do that in all courses of your business. And gather all of the information that's available. So let's say that a hotel partner says, oh my gosh, this sitter came in and the parent told us that she trashed the room and there were alcohol, I'm making this up, there were alcohol bottles everywhere, whatever. Get all the information that's available. So, maybe there's security footage of actually the parents and their friends brought all that alcohol in, and the sitter came in with a tiny purse, like who knows, but get all the information that you can that's available as quickly as you can. And then you need to strike the right balance between urgency and patience. So this is a tough one, but if you have an escalation and it looks like it's heading down sort of a legal path, you want to act with urgency and make sure that you're trying to be proactive on it, but you also don't want to do anything too rashly. So again, get all the information you need, take a deep breath, make sure you're not reacting to something out of emotion versus objectivity. And then when in doubt, and always in these sort of situations, get good legal advice. And then I think this is my final slide. Protect your bank account. I already mentioned this. Don't do deals with people who are not paying you on time. Make sure you have payment penalties for people who pay late. Be absolutely clear about your scope of services. Don't allow people to take advantage of your company because they believe they were getting X, Y, and Z and it wasn't outlined. And things that you should look out for when you're doing deals, early termination fees. Let's say that you've decided to work with an internet service provider and they are just totally flailing. What you don't want to do is find out that you don't have any performance agreements in there, or that you're going to have to pay a price for leaving early. Keep an eye out for renewal notification windows. So when you do deals with, again, whether it's a vendor partner like a help desk support tool, or even like the calendaring tool that you use, I always put in my calendar when I need to give them notice. Otherwise, I might get renewed without my knowing it. And watch out for built-in price increases, like, hey, the first year, this is a great deal, but look, the price jumps up the second year. So these are just things to keep an eye out for. And I'm happy to share these slides later. So when does a partnership look great? At the end of the day, when both parties come out ahead, if you have a deal where you are working with absolutely the best attorney, or you found the best partner to sell your services with, and you both are gaining from it, great. That's a good sign. The partnership should improve the outcome for both of you. I won't go into all of these because I do want to take some time for questions, but this is really how you know that the partnership has been done well. And I don't, Erica, do we have some questions?
Yes, we do. Okay, so that was wonderful. So much information. I don't know about you, but I am a person that really likes to learn. Obviously, here I am. And so getting really context and content rich information is really important. A question came in that are values a consideration when selecting strategic partners, and how do you assess these without being off-putting?
Oh, no, absolutely. That's a really good question. And the off-putting part is also a really good question because they go hand in hand. Yeah. And I think it goes both ways, right? So we get one of the things, if you believe firmly in your company's values, you should make sure you're including that in your sales component when you're looking for partnerships. So for instance, at UrbanSitter, we're all about transparency, empathy, equity. We have 6 core values, and they show up in our pitch decks, even when we're looking for partners, because we want people to know that. We talk about the fact that we are a very diverse team. We work with diverse companies. I think if you are proud of your values, you should put them out there. And likewise, you should look for them in other partners too. So a good example would be, let's say you're going to do a partnership with, you're picking your lawyer, let's say, and that's really important to you. Do some research, not only on the firm, like the firm should have some of their values listed on their site, but also look at some of the partners you'd be working with. It's pretty amazing what you can turn up in Google. So, I noticed that in that our attorney, actually, one of the guys we work with that I really like, he volunteers time with the ACLU, which I think is great. I mean, again, it goes back to, it's like those are my core personal values. That might not be everybody's, but you want to make sure that who you're working with is aligned. And I think the off-putting part is a good question, though. You have to be kind of subtle on how you do it. So a great way to do it might be, our company really values transparency, and as such, we share a lot of reports with you. I'd be curious, like, how does your company think about sharing information with us? Or, one of the things that we're really excited about is that our platform, on our platform, 96% of the people on our platform, of our care providers, define themselves as women, she, her, and 45% describe themselves as non-white. And 85% of them tell us they're using this money for education and improving their lives. I'm just curious, like, how does your company think of yourselves in terms of focusing on diversity? So there's a way to say it where you're sharing your value and you're opening up something in return. And I can tell you that if you get kind of a blank stare, then chances are they're probably not sharing that same value, or they haven't thought about it.
Absolutely.
I love that question. And I will say it comes up more and more frequently. We are asked that more and more frequently as I imagine this group will be asked when you're doing partnerships on, what are your company's core values? And it can be in your differentiator section of your pitch too.
I like that. Another question is, any advice on declining a partnership without burning a bridge?
Oh my gosh, absolutely. And declining, I think it takes more guts to decline a partnership than it does to take a partnership.
Right.
And man, I bet if you talk to anybody who's been doing their job for a few years, they'll say, I am so much faster now at saying no to things than I was before. Yes, if you know the partnership is not the right fit, you say that, hey, this is really exciting. Unfortunately, we set out our priorities for 2023 already, and I just don't think we have the bandwidth. Or, oh my gosh, I'll even do like a microcosm of a partnership. Oh, I'm so glad that the Adams family referred you. Meanwhile, what I want to tell you is I've like back channeled you, and everyone else tells me never to work with you. I see that you've done like 10 lawsuits. I understand that this is what you're looking for. I just don't think that this year we're going to have the right candidates for you. Or, I know our partnership is up for renewal for next year. We've kind of changed our direction a little bit, and we're going to be focusing our resources on another thing. I'd love to keep you posted if that changes. I mean, there's ways to say it that you don't have to give the absolute reason.
I love that. I really like when people give actual examples of verbiage, because I think so many people, they get the abstract of, do something like this, but they really are struggling to put the actual words together. So I really like that you did
But I
that.
think saying no, whoever put that question in, I love it, because gosh, sometimes it's like so much harder to say no, and saying no takes courage, and and nobody ever says, oh shoot, I wish I would have not said no to them. Usually the other
Right.
way around.
Absolutely. And I think that your core values of leading with empathy and honesty and transparency and compassion can still come through in the way that we decline those
Absolutely.
partnerships, so that we're not burning bridges. Another one, what's the number one tip that now that you wish you knew when you started?
Oh, that's a good one. Well, I'd actually like the saying no one. I'm going to steal that one.
Yeah.
That probably wouldn't have come to the forefront of my mind, but it's absolutely right. I think the other thing would probably be when I put in one of my slides around over communicating. I think it's easy to assume that everything's going well, but I think it's actually really important to make sure you're checking in, especially with any kind of partnership where you want it to work both ways. And so you want to make sure you're checking in, and that the other person or the other entity is also working for them.
Wonderful, wonderful. Yeah, so now we have I think 4 more questions that were submitted in advance.
Yeah, one of
That
them, I know somebody had said that they currently work with a backup care partner or a school I think it was Bright Horizons, and they're looking to
Mhm.
work with the Goddard schools. And I thought that was a really good question. Like, how do you go and get other similar clients? And I think, first of all, you do some research. Oftentimes you're not allowed to mention your other partners. You've got it signed in there that you can't use their name, but you can say, kind of similar to what I did earlier, like, hey, we work with one of the top 10 largest employers in the United States. Or, hey, I don't know if you know this, but we already have helped 40 families at a nearby daycare center with backup care, or we've helped provide backup care providers to the school, whatever the type of partnership. And I actually like that person's example, because unlike a Bright Horizons, the Goddard School, I think most of them are actually franchised. So really it's about starting by building the relationship with like one school at a time. And I think there's ways you can infer that you're working in the space without giving away the name of your other partner. And obviously you have to check that agreement to make sure it's okay that you work with neighboring entities. But if it is, I think you can go in and pitch the other school program without using the other partner's name.
Wonderful. Another one submitted, how would messaging differ, if at all, for a partnership for permanent services versus a partnership with temporary services?
I love that question, because we sell both into companies, and sometimes companies only want one, like we only want backup care, and really we know they should also be doing full-time services. And so again, this is where I feel like data is your best friend. Oh, I don't know if you know this, but on average, a family looks for a new full-time care solution, every 2 years, and it takes the parent something like 36 hours, 40 hours. And I bet they're doing some of that during their work hours. Like, I think there's a way to pitch it. I think you pitch the use case.
I like that. Another question that was submitted was, do you have experience with international partnerships, particularly in hospitality? And can you tell us about that?
I saw that one. Well, it's interesting. I actually used to work in hospitality, but I don't have any experience doing those type of partnerships. But one thing I know is that when you're working with, it's oftentimes easier to do a deal. If the company also has hotels based in the US, you can usually do a deal with the domestic partner, and can actually serve as on the international as well. If you're going specifically after, let's say, hotels in France, like, you probably want local counsel, because the regulation, first of all, I know, especially in the childcare category, regulations and licensing vary very differently by country to country. And so you want someone who knows that. So my recommendation would be start by if you're in like a local women in business or startup business group in your city, start by asking people in your group if they've done deals in those countries and see who they resourced.
Wonderful. Who's the most likely contact that can get you in the door? Who has the ear of the CFO?
Right. Okay. I'd like that one. And that kind of goes back to the thing I mentioned earlier, which is you don't actually need to get to the CFO in step one. You need to get to somebody who's excited about your service, and then ideally they can lead you. So I would say start with, if you're offering care benefits, whether it's elder care or child care, whatever it is, find somebody that you've worked with who works at that organization, who can give your company a 10-star, 5-star review, and then have them work their way up the chain through the introductions. I don't think you have to get to the CFO right away, but ultimately that's probably who you're selling to. So in the process of the meetings unfolding and getting closer to the CFO, like, be prepared for that ultimate pitch. And if it's the CFO, always include the return on investment, because they are going to want to look at it from a financial lens.
I love that. I really like that tip of getting to the person that is most excited about your business and what you are offering. I hope you all have learned as much as I have today, and that you found this time to be valuable. And a great investment, a great ROI, right? Return on your
I
investment.
hope it was a good ROI for people's time. Yeah.
Right. Kelly will be sending out the recording for this. So if you want to watch it again or watch the replay, I'm sure she'll get that out to you. Again, APNA is committed to making sure that we're growing our minds as well as our businesses in 2023. And so we want you to keep your eyes posted on our Facebook page and our website for upcoming webinars. We'll be having them monthly. If there's anything in particular that you would like to learn about, or subject matter that you really would like us to delve into on your behalf, feel free to email that to any of our administrators, drop it on our Facebook page, send it by Facebook Messenger, email, whatever works best for you. We really want to make sure that you're getting content that you find valuable and that you can apply tomorrow. Thank you all so much for your time and for your investment of your personhood. We wish you all the best on this wonderful Thursday, and we will see you next time.
Thanks.
Bye.